Hello folks, I am your host, who of course is a host, and I am not a financial advisor, as you should know by now. Actually, you wouldn't. Because we've only gotten 7 views, so only 7 people know that. But anyways, today we have a very short video. We have only 2 topics as of April 14th, 2026 that we are going to go into. And the first topic of today is the institutionalization of on-chain infrastructure. So, as some of you may know, maybe you don't, but we're getting to it. We're seeing a massive shift from institutions simply investing in crypto to actually running it, right? And so major players as network guardians, such as just today Visa, officially launched its own validator node on the Tempo blockchain, right? And so this isn't just a pilot, they're now primary player in validating transactions and shaping stablecoins payments in-house, right? And then there's the rise of RWA, which I spoke about in a couple other videos, and I spoke about in the video from yesterday, is that tokenization has moved past the experimental phase, and systems like BNB Chain have seen their RWA valid surge, hitting roughly 3.4 billion this month, driven by institutional giants like BlackRock via their Build fund and Circle. And there's also the structural breakouts, as Bitcoin recently reclaimed the $75,000 market, and analysts are noting that this is, oh my, what? I haven't been on that. Oh, 75. Okay, anyways, where was I? Yeah, right. So analysts are noting that this isn't real FOMO anymore. It's driven by persistent ETF inflows and a shrinking free float of available Bitcoin as institutions lock up supply for the long term. Our second topic today, after that one, is going to be about crypto as a macro hedge, right? And so amid global conflict, right? So there's a second major topic, and it's specifically ongoing because of the U.S.-Iran conflict and disruptions in the trade of hormones, right? And so there's the digital gold test. When the conflict escalated earlier the month, the market saw a sharp risk-off drop. However, Bitcoin staged a massive recovery faster than traditional assets, asserting its role as a liquid, borderless recovery vehicle, right? And so there's stablecoins and essential utilities as in volatile regions and fluctuating markets. USDT and USDC are no longer seen as trading pairs, right? They are being utilized as indispensable tools for portfolio management and dollar hedging in the face of oil-driven inflation, right? And so there's the AI DePIN pivot, as investors are aggressively rotating capital into AI infrastructure like Fetch.ai and Bit and Soar, and DePIN, decentralized physical infrastructure networks, right? And so the narrative here is clear. As centralized systems become more vulnerable to physical and political conflict, decentralized AI and compute power are becoming the go-to hedge for tech-forward investors. And then the current market pulse, just as I mentioned before I get into topic 1, is that right now the Bitcoin is at approximately $75,470, and it's up by 5.4% in the last 24 hours. Ethereum is at $2,405 and has gone up by 8.7%. And then the market sentiment for the price is very neutral, and it's exiting that extreme fear that I was at. As if you have been following, I believe it went to 9 or 5 out of 100 or 15 out of 100 for the extreme fear, and it's currently at 29, so it's exiting that, right? So with that said, we are going to get into our first topic of today. So the institutionalization of crypto space in 2026 is no longer about big banks just talking. It's about them building and operating the core plumbing of the network, and we've moved from the speculation era, as I mentioned before, as many analysts are mentioning, to the infrastructure era. And here's a deep look at 3 pillars driving this shift. So 1, there's the rise of the super validators. As for years, blockchain networks were run by hobbyists and crypto native firms, right? While today, traditional payment giants are becoming the literal guardians of these networks. So for example, and as of today, this is big news, Visa is coming on this tempo, right? As just this morning, April 14th, 2026, Visa went live as an in-house validator for Tempo blockchain. And a network co-founded, it is a network co-founded by Stripe. And so by running its own node, Visa isn't just using the tech, they are essentially securing the network and ensuring that stablecoin settlements happen with Visa-grade reliability. And then there's also the Canton network. As, what in the world, my mouse keeps going invisible. Mouse, hold up, let me turn my, brightness up on my, notes so I can see my mouse. There we go. Anyways, the Canton networks, as Visa also recently joined the Canton network as a super validator, helping other banks being private, regulating payments, flows on chain, and also this allows banks to move money with blockchain speed without sacrificing the privacy required for institutional finance. So number 2, there's the RWA, the 25 billion tokenized breakout, right? So RWA are the killer app of 2026, right? And the reason for that is so there's really this goal to take boring, quote unquote, high yield assets like US treasuries and put them on a blockchain so they can be traded 24/7 and used as collateral. So BlackRock's expansion with their Build Fund, which is currently the world's largest tokenized treasury fund, recently expanded to the BNB chain. And this allows traders to use tokenized government debt as collateral for trades in real time. And so there's really these dominant layers, as Ethereum still holds the lion's share of this market, securing roughly about 60%, which is about $14.9 billion of all on-chain RWAs. However, faster networks like BNB Chain and Solana are rapidly catching up by offering lower fees for high-frequency institutional trading. So, and then number 3, there's the store of value, the momentum ETF effect, right? And so the narrative of Bitcoin as digital gold has essentially been cemented by the massive success of the US spot ETFs. And so there's the $50 billion milestone, as BlackRock's IBIT fund just crossed the $50 billion AUM, assets under management, mark, right? And so this represents a massive shift in how, essentially how safe money is allocated. Next, there's also this supply crunch, as with ETFs and corporate treasuries, like MicroStrategy, which had another 13,927 Bitcoin this month, buying up the supply. The amount of Bitcoin actually available to buy on exchanges is at record lows. And this institutional vacuum is why we're seeing price resilience, even during periods of global tension. How much is that? 13,000 Bitcoin and Bitcoin? Isn't it like one Bitcoin, like the price right now? That's for one Bitcoin, correct? So 70, that's interesting. 75,000. Let's just do 75,000, right? Times 13,000. Let's round it up to 14,000. 75,000 times 14,000. Let's do 75 times 14. That's 750. Jeez, that's like hundreds of millions. That's almost $1 billion. Crazy. Crazy. You know what I would, if I had $1 billion, you know what I would do with that $1 billion? Nothing. Nothing. I'm straight up saving. Saving it. Now, wait. I'm not being boring. Hold up. I'm taking that money, right? I'm saving $998 million with interest, and I'm taking another $2 million, and I'm using that literally for nothing but, like, I'm gonna eat, like, yummy food every day, right? Eat yummy food every day and live in, like, a small cottage. I don't know. It's not gonna be expensive. All I need is yummy food, and I'm good. I'm good, boys. The rest of the $1 billion, I'm gonna save for the next generation if the next generation comes, which is very unlikely. So then I'll probably end up donating it to the next generation. Anyways, so a comparison of all the RWA blockchains as of April 26. So Ethereum is at $14.88 billion in treasuries and private credit. BNB chain is at $3.40 billion with commodities and collateral. Solana is at $1.10 billion with tokenized equities. And XRP Ledger, which is not too far, is at $0.36 billion, which is $360 million just about for cross-border settlement. Right? And so this institutional buying is effectively ending the old 4-year boom and bust cycle, as I've said before, as many analysts are saying right now, replacing it with a more stable, upward trending market driven by structural demand rather than retail hype. And that's going to end for topic 1. So we are going to get into topic 2. Oh, Vishudo, what's it? What does the finger mean? What is that? Why are you putting the finger up? Whoa, which finger? Pointer finger. Thank you for clarifying that. Well, thanks for asking. This indicates to me while I'm editing when I'm going to put in a chapter, because I figured that not everyone wants to hear the same information, so, you know. Anyways, the second topic, major topic, is the emergence of crypto as a geopolitical safety value, right? And so, oh my gosh, my thing went off. Why didn't it connect? Hold up. Let me get my headphones on. Need the headphones, boys. Connected. Bluetooth connected. So anyways, due to the protracted U.S.-Iran conflict and disruption in the Strait of Hormuz have fundamentally changed how both retail and institutional players view digital assets, right? And so essentially here's how this is playing out right now. So 1, there's the risk on snapback, which is like digital gold versus oil. As Bitcoin is currently performing a regime-dependent role. So while it often trades like a tech stock, is increasingly decoupling from traditional markets during high-stress geopolitical windows. So outperforming gold since the conflict escalated in late February, Bitcoin has gained over 10%. while traditional gold has actually dropped nearly 10% in the same period. There's also the $75,000 tug of war, as just yesterday, April 13, the market was in extreme fear, as Bitcoin dipped towards $70,000. However, today, it staged a risk-on snapback, surging back to $75,000 on news of potential ceasefire talks. And this volatility shows that Bitcoin actually is now the primary thermometer for geopolitical tension. Number 2, there's commodity trading and banking, right? As one of the most practical shifts in 2026 is the use of crypto to bypass traditional banking bottlenecks caused by war, right? And so there's the de-banking trend. As traditional banks withdraw from high-risk markets due to sanctions or instability, commodity traders are turning to stablecoins, USDT or USC, for cross-border settlements. And there's also instant liquidity, as in a world where a physical blockade, like the one threatened in the Strait of Hormuz, can freeze credit lines, stablecoins offer a 24/7 settlement mechanism that doesn't rely on the SWIFT system or Western correspondent banks. And then number 3, there's DPIN, right? Decentralized physical infrastructure. So, geopolitical conflict has highlighted the vulnerability of centralized tech, and this has led to explosion in DPIN. So, there's the strategic assets. So, AI and compute power are now treated as geopolitical footballs, essentially, right? DPIN projects allow for decentralized GPU rendering and data storage that cannot be turned off by a single government, right? And there's also energy sovereignty, as we are seeing Bitcoin as a battery, we are seeing Bitcoin as a battery initiatives where energy producers in conflict zones use excess power to mine Bitcoin, effectively exporting their energy over the internet where physical pipelines are blocked or sabotaged, which I honestly don't know how that works, right? So they're using excess power. Okay, I can see that. So they're turning the energy into money. No, I don't get how that works. I just have it down as information, so I'm giving you the information. It's what you do with it. I'm not a financial advisor, but like I don't understand what it means. Like personally, I mean that's a bit embarrassing, but I don't know everything. No one does. Well, maybe someone does. Actually, we don't know if we don't know everything. We don't know if there's someone who does know everything. It's very unlikely, but maybe. I don't know what any of that means. That information is what you do with it. But anyways, so snapshot of geopolitical resilience, and also we have a quote as saying that Bitcoin's classification as either a speculative asset or a safe haven is now regime dependent. April 26th research report, right? So the conflict trigger, there's a Strait of Hormuz, and the market reaction is that oil spikes and BTC initially dropped, but it recovers as a hedge. And the trend right now is currently volatile. As for ceasefire rumors, it's been reacted with a risk-on rally. Ethereum and alts lead the surge, and it's looking very bullish, as many analysts and people are saying. And there's also banking sanctions, right? And there's a massive spike in stablecoin volume in emerging markets, right? And the trend is that there's a lot of utility growth. And so this environment has matured the market. Investors no longer see crypto as really just a lottery ticket. And they're starting to see it as a programmable resilience against the fractured world in this new institutional era. So, what could all of this mean? And this goes into the final thing we're going to get into before I give you the sources and end of the video. And that is that this convergence of institutional power and geopolitical unity suggests that we are witnessing the great integration of crypto. And it marks the end of crypto as a separate speculative island, and its birth as a permanent layer of the global financial and political system, right? And so, what does this mean likely for the future? Well, one, there's going to be the death of the 4-year cycle, as many else have been saying, as historically, if you don't know, crypto moved in a dramatic 4-year boom and bust cycles tied to the Bitcoin halving, right? And so the shift is that with institutional giants like BlackRock and Visa providing sticky capital and costly utility, the market is maturing. And so the result is that instead of 90% crashes, we're seeing institutional consolidation. Prices are becoming more driven by microdata, which is inflation and Fed rates, and global events rather than just retail hype. And while volatility is dampening, turning Bitcoin into a legitimate portfolio anchor, and it's turning in rather than a lottery ticket, right? And then number 2, there's a parallel global financial rail, right? And so the use of stablecoins and decentralized infrastructure during the US-Iran conflict proves that a non-sovereign financial system is no longer a theory. It is a necessity. As neutral territory in a fractured world where the US uses the dollar SWIFT as a tool for sanctions, neutral blockchains offer a middle ground for global trade. There's also geopolitical leverage, as countries that once feared crypto are now seeing it as a way to maintain economic activity, even when cut off from traditional banks. And this forces a race for regulatory clarity, as nations realize that banning crypto doesn't stop it, it just excludes them from the new global plumbing. And then number 3, which I believe is the last thing, is that as AI agents become more autonomous by mid-2026, they're going to need a way to pay for things, right? And so there's programmable money. AI users can't open a bank account, but they can own crypto wallets, as many people are starting to do with AI right now. And so the outcome is that a huge portion of future on-chain volume won't be humans trading. It will be AI to AI transactions, buying compute power, trading data, or managing energy grids, using low-cost rails like the BNB chain or Solana. And so the bottom line is that we are moving away from the what is crypto question and into a what isn't crypto question. And by the end of 2026, as I mentioned before, and as many people mentioned, unless you're into crypto, most people won't even realize they're using a blockchain. It'll just be like an invisible backman for your bank's international transfers, or your brokerage stock settlements, how the energy credits for your smart home, or how your video game runs so smoothly, right? And so the Wild West is being paved over by the Wall Street and world governments, turning into a high-speed highway of the 21st century economy. And so that's essentially going to end it for our information today. The sources where we got all the information from is Visa Investor Relations, Pi Mints, Grayscale Research, Budget News and Binance Square, Binance Research, TradingView / Coinpedia, BT Markets and KuCoin Blog, Reuters, and on-chain aggregators, right? Including Fear and Greed Index. So that is essentially it. This is where we're going to conclude our video today. A bit short because I'm very low on time. It's 5:46. Usually I'm recording this at like 3. I'm late. I'm tired. Like most other people are. I know you're tired too. I know you're tired too, because if you're watching this, it's 8 p.m. It's 8 p.m. or past, or maybe you're watching in the morning. You're quite early. But anyways, and we're gonna conclude it. If you watch this far, you're literally, quite literally, you're the first. If you watch this far, you're the first person, because I ain't gotten views at all. I got like 7 views. We're starting out early, still going, we're still grinding. So yeah, if you watch this far, amazing. Thank you so much, and I will hopefully see you in the next one.